So today I want to talk about a topic that came up with a client discussion. Falls into lifestyle for those of you who are above the age of 50 with parents that are getting up there in age. And this is the tough part of being what's called the sandwich generation. So what exactly that is, essentially you have younger kids that you're still trying to take care of, whether they're an infant toddler or they're still in their teenage and young college years. You got the financial burdens and also mainly the struggle. That struggle is real of raising them and the bandwidth constraints that comes along with that. Additionally, on the other side, you have your aging parents where whether they have money or not, you have to worry about and take care of them and all their nonsense. And also may even have to control and be the official trustee of their finances. So I think it's a pain and struggle that we see is very consistent with most of our clients because most of our clients are the ones where they have multiple brothers or sisters, mostly the ones that are the financial expert within their family or the ones that the sisters and the parents will look up to in terms of finances. And so this responsibility gets bestowed upon them. It's a joking term out there in the assisted living world that this person is codenamed Cheryl. It's not always a woman, sometimes men that are put into this role, but it's more of that nurturing type of personality that unfortunately this stuff gets left behind for somebody to tend. And it's typically with somebody who still lives nearby the aging grandparents. A lot of people may have a sibling or two, and those other siblings may have moved away to opportunities or through marriage, went somewhere else. And so the Cheryl profile, whether man or woman, is usually the person who lives nearby or unfortunately may have needed to move next to the aging parents. Now, I don't know where I heard the origin of the term or role of Cheryl, but I believe it came from like the Millionaire Next Door, but it certainly comes from this term for the closest default caregiver, usually has something to do with the birth order and personality traits where the responsible one gets picked, usually by default. When we unpack some of these ideas in more intimate circles, especially when we do these in-person things within our group, you start to understand that, and hopefully these are lessons learned not to repeat, of lack of clear roles. Brothers and sisters don't really decide who's got it with mom and dad and how the money is going to get distributed. I talked to a lot of people where the parents never really wanted to face their own demise and do a trust. So that's baseline lesson one there. But they never really wanted to be the bad guy and give this person X amount of money and that person X amount of money. They wanted to just walk that fine line and say, oh, you guys can have this house. I always thought like giving unliquid things was like the worst. And if you just wanted to get your kids pissed off at each other, you do that type of stuff. I get why people do it, but a lot of times it's because they just don't want to be a leader, take a leadership role and do it, right? And when a leadership role, what I mean like being the bad guy and sometimes and giving one person this and one person that and being okay with the kids hating you. But I argue it's like, who cares if they hate you? You're dead. So give this person X amount of money and that person X amount. Just give them the money so they're angry at you, so they're not pissed off at each other in their next 20 to 50 years of livable life that they have on earth. So anyway, that's my rant with that. But you also, from this, you see this silent resentment that builds up between the kids that come from, even if there is no money or assets involved, of just, hey, whose expectation is it that's going to watch over mom and dad? It needs to be very explicit. But anyway, all this is going on, and back at home, switching gears a little bit, all while raising their own kids on their own and all the financial struggles with, we're going to send our kids to USC and spend $100,000 per year on that. This obviously brings up the topic of what financial decisions get quickly sacrificed when you're in the sandwich generation era of your life. Some of these things are delay investing, right? You have to divert cash flow, and cash flow is king, as they say, because that gives you the breathing room and the free cash flow to invest $50,000, $100,000 a year into this or that. And I think maybe the reasoning behind that is with alternatives and private deals, you can't just invest $500 or $2,000 per month as a fractional portion of your IRA. but you have to build it up. It has to be a meaningful amount, whether it's $50,000 or $100,000 increments. Very similar, when there's a recession and people lose their jobs, they're okay buying the $5, $7 incremental latte or having a little treat here or there. But the big $20,000, $30,000 vacations go on the back burner. Same premise here. Ultimately, when things get tough and you got to tighten the budget, overfunding kids' education versus underfunding your own retirement, these are the things that take precedence over getting on the offense, right? You start to get into more of a defensive position and you want to minimize your risk exposure. But unfortunately, sophisticated investors look at this as losing up your exposure to the upside. Not to mention just dealing with the basic nuances of taking over your parents' archaic checking account or credit cards if they had any, or insurance policies, switching all that stuff over so that you can be the designee on those things just bogs you down. And unfortunately, a lot of these more defensive type of activities and getting on the offense, and to use a specific word here, it's a shift from wealth building mode to wealth preservation mode when you have to get into your parents' business and stuff like that, where it's hard to switch between these two left and right brain type of mindsets. But switching topics here and getting back to the main thing, what we see a lot of times, especially from a lot of our clients these days who are typically in their 55 to 65 age range, is they've overcome and passed this phase of the sandwich generation with, unfortunately, and morbidly, the parents have passed away. So one end of the sandwich is not there anymore. And it's created a mental bandwidth and also capital to now invest in things that they would have liked to do decades prior to, such as investing in alternative investments, getting past the world of traditional investments where you're getting sloppy seconds access to different investments out there through like a real estate, for example. You can invest in the same apartments as a lot of the big players out there. You unfortunately have to just get access it through a real estate investment trust or REIT, which has a lot of overhead fees, etc. And you're really getting access it through the secondary market. Where what we try to do as investors is try to get access to investments through the primary means, getting direct access, cutting out as much middlemen in the process. Some people ask, why don't these people deploy their assets, which they do have access to, whether it's their own or their parents to, before their parents pass away? And I think it goes down to a lot of the fear that people get when doing anything different, whether you are in an unhealthy relationship and you want to get divorced, but the fear there is, whoa, I don't want to look stupid in front of my friends. I know that's silly, but that's a real fear. I was watching a YouTube video on Kobe Bryant talking about fear. He said that a lot of people don't want to take the last shot. Why? When you unpack it and you look at it from a pragmatic standpoint, I don't want to let my teammates down. I don't want to go through that torment. And when you really start to break it down, you really start to realize there's really nothing to be fearful of. But nevertheless, in this situation, you could be fearful of going into some investment, it not working out, which is something in any investment, right? That's what investors do. We go into worlds of uncertainty. Ideally, we go into things where we have some of the chips stacked in our favor, right? I think this is one of the worlds where you do allow for insider trading or investing in things that there is certainly a trade win to your back going into it. But despite this, you don't want to go into the uncertainty because of the fear for perhaps what will my parents think of me if I screw up or if I take a loss, where this fear goes away for a lot of people if that was their fear, if their parents are no longer here anymore. Not going to say I agree with it, but I certainly understand and empathize with it. This is very similar to a lot of times when I have onboarding calls with people, I typically ask them, especially for the folks that have waited for their 50s or 60s to diversify out of Wall Street, have you guys ever looked into buying little rental properties or gone down that rabbit hole? So I always like to understand how have they tested the waters a little bit. Typically, a lot of people have owned rental properties, so this stuff is the natural transition, is they've already gotten off the beaten path into direct investments on their own. But for a lot of people, especially accredited investors these days, they have not had any exposure to that type. There is a bit of a gap that they need to get past intellectually, and a lot of that is it's blocked by fear. So whether it's a windfall or just a mental bandwidth thing, a lot of people who get past the sandwich generation era will find that is an opportunity to get more involved into the world of alternative investing. Today's kind of message was just to coin the term, and maybe for those of you guys in the struggle, maybe feeling a little bit lonely, you're not alone. It's actually a very common situation to get into. And for those of you guys who still parents that are still young and able, take that as opportunity to see what's on the horizon. Understand that the parents are not going to be around in good health and independent as they are now, and to enjoy and bask in that type of environment and have some gratitude for that, but also know that time is fleeting. And I think that's another thing that makes it harder for people to have kids these days. You see this with a lot of countries as education and wealth rises. There is a lot less of a childbirth rate, obviously. We're all taught to get our financial stuff in order before we start having kids and family creation. Now that puts us into our late 30s and even into our 40s. And then this is about the same time the parents are about 70s and 80s, right? And it puts you into this sandwich generation. So these are some of the topics that come out of with some of my clients. And obviously this stuff comes along when we do our retreats. Having that camaraderie, the ecosystem that we've created of like-minded, value-based investors, going through a lot of the same struggles through life in these situations, to know you're not just alone, but also using these struggles as a way to find camaraderie and a focal point to meeting everybody, coming to the water hole and meeting other people and building your own personal connections along with you. I guess that's my role in this whole value prop is I'm the one who brings everybody to the watering hole and allows you to make your own connections. And at the end of the day, if you ask any wealthy person, somebody over $5-10 million, they will always say social relationships are the currency of the wealthy.